course, we couldn't do the first hybrid conference after the pandemic without talking about the impact of the pandemic on fintech and the impact of fintech on the pandemic. Presenting you this in a panel is David and Brear from 11FS, who will introduce you to his panel members.
I feel like I should have had a longer music to run onto for that one, shouldn't I? But do you know what? I'm just excited to be here, quite frankly. Like, this is quite a weird thing. I've basically been doing sort of presentations and various things in front of my family and my kids for the last 18 months, and look at me now in front of people. This is really exciting. I hope you guys are excited as I am. I probably should introduce people and get them on to talk about what we're doing first, though, shouldn't I? So today, what we're going to be doing, we're going to be talking about that thing that has been sort of keeping us all occupied for the last 18 months, which is the pandemic. How has the pandemic affected fintech? How has fintech affected the pandemic, and everything sort of intertwined amongst those things. In order to talk about it, we've got a really great panel, so if I introduce them on. First up, we've got Bruce Curry, who is the Vice President Collections and Recovery EMEA at FICO. Come on, Bruce. I'm feeling a bit sort of panel show host guesty for this one. Symmie Swil, we've got Head of SME Banking at Starling Bank. Come on, join us. It's a very long stage, isn't it? Yeah. Martin Boyd, President of Fintech Solutions at FIS, and Marilena Ioannidou. I've been worried about getting your name wrong, Marilena. So is that Ioannidou? Was that right?
Ioannidou.
Oh man, I was very close,
right,
but I definitely got it wrong.
That's good.
So thanks for joining us, guys. Like, this is obviously, you know, it's affected pretty much everything. You know, we're talking about fintech, but banking, financial services much more broadly. It's had a real impact, both, I guess, you know, very negatively, given we're only just able to meet each other now. But there's some real positives that have come out of this last period. So to get us going, I mean, Martin, do you want to sort of start us off with a bit of a view? Because, I mean, I feel like as a whole, there's probably quite a balanced view. But do you want to kick us off?
Yes, it's great to be in front of people. Like many of you, probably spent most of my life on Zoom for 18 months, and in fact I was in the office this morning, and first time I've actually spent time with my team in that time face to face as well, so it's brilliant to see it. So really delighted.
Even the commute in feels like a job.
I know,
isn't it?
I know. But you know, I think the surprising thing about the last 18 months is just how well the industry has survived, the financial industry and the fintechs supporting it. I think a couple of big things I think we've seen as we've gone through this period. I think one is that the acceleration of the rate of change has increased dramatically, particularly around what people are doing with digital. And you know, my part of the business responsible for the banking and the capital market sides. It's incredible how we've seen access to data and the tools that firms rolled out to their customers just accelerate as we went through that period. And I think, you know, linked to that was the decision-making cycle that people are now making, which I don't know whether the rest of the panel experience this, but what we've seen is that previously there were barriers in terms of going through a lengthy process in terms of decision-making. And what we've seen is that actually those barriers have kind of fallen away. And if you've got something relevant and something you can bring to market really quickly, then you can get that done. And so it'll be very interesting to see how, you know, and whether that particular facet of business persists, you know, once we start getting back to the office and start getting weighed down with either process or other things that seem to, you know, impact us.
Yeah, we only needed like a global pandemic to speed up procurement processes, apparently, right? So, but it is interesting. I mean, do you guys see a similar thing? I mean, you know, at Starling, you guys have sort of accelerated through this in terms of product development. So, you know, that's a great thing. It allows you to shine.
Absolutely. I mean, we've obviously had the advantage. Is that very echoey?
I can hear you.
We've obviously. Oh, okay. Is that too much?
No, it's good.
Fine. Okay. We've obviously had the advantage of everyone having to become digital. So we've had people that might have been reluctant to take on digital banking, sort of moving to us in droves, thankfully. I think the biggest thing is, though, that it hasn't been a positive for everyone. So, you know, for us, we obviously took the opportunity to step into the breach when there was the bounce back loans. And I think one of the biggest changes from this is we've now got 1.6 million small businesses that may have never taken on debt or been thinking about taking on debt that now have to manage debt potentially for the next 6 to 10 years. And when you think about the decision-making processes, they now have to take that into account for their forecasting, their business planning, how they consider risk. And I think it'll be really interesting to see how we actually all think about risk now. So in some ways, people are taking on more risk, and that might be in how they're investing, or it might be that people now really want a much larger buffer just in case, the black swan event occurs.
Yeah, we never thought it would happen, and now the frequency of these things happening are probably going to be more frequent, sadly, aren't they? So I need to buy more masks, I think is probably the thing. But what do you think? Both, I guess, on the big banking side of things and in the fintech side, how have you guys seen the sort of industry respond?
I think there's three things have stood out for me, and I'm talking on behalf of not just the UK, but I cover EMEA, so Europe, Middle East, and Asia.
You're talking on behalf of the UK. Are you? You're the Queen, apparently. This is
I've been called in the past, but not today.
There's another story for another day, guys. Okay.
So three things stand out for me. One is that the old saying, "Need is the mother of invention."
Sure.
But actually, need was the mother of adoption. Most of what people needed to be invented was actually already around. Yeah, we talk about AI and ML in our own organisation, in our fraud products and stuff like that. We've had AI in place, neural networks, all the kind of features and functions of machine learning for over 25 years now. So for me, what was good was people were learning it didn't need to be invented, but now I'm being forced to adopt, and I thought that was good. There was a massive cry out right at the beginning for, blimey, I don't know how good what I know is worth to me, and I'm not sure where I'm going to get what I need to know, so a cry for alternative data, different sources of data. And then when that began, and again, it wasn't new. Somebody mentioned in a previous presentation, WeBank. WeBank don't use any financial data to credit vet their customers. They want to know who you're with in Shanghai on Friday night, and they'll base their risk on that. Yeah, and so there's a lot of alternative sources of data, from psychometric to social to transactional to spend, and all the different sources that's been done, and these aren't new and need to be tapped. People like Cabbage and Niche and many others have been using these sources of data to make their decisioning. And then the final bit was the whole accelerating of digital transformation, both in customer engagement channels, because we had to reach people that were all working from home. There is a fourth dynamic, and we'll probably cover it a little bit later, and that is there were lots of predictions of what would happen in the short term, but the short term didn't arrive. It became a long term. Yep. So in the early days, people were talking about a 90-day and 180 days, and we'll all be through this. And then as things moved on, different things happened. You mentioned about Starling's expansion and success in the Bibble and Sybil space. Well, 4 other banks pulled out of that and said, we don't want to be in there when they started to see the term. A week before I came here, the other thing about long tail on these issues, I was in a government meeting, in a meeting in Greece with government, where they were talking about how they were going to fund, not different to the British government, on backing loans and non-performing loans especially, of which a huge proportion of the Sybils and Bibbles are, which are impacting SMEs. And they were talking about how they were going to fund the recovery of 12 billion of these euros worth of these NPLs that SMEs had accumulated from the financial crisis in 2008. These things have a long tail on them, and you mentioned 5 to 10 years of payback. There's a huge amount of fraud in there. There's a huge amount of debt in there, but we're yet to see it because this is the 88th financial crisis in the last 100 years. Most people think we've only had 2, but there's actually the 88th, and as of yet,
we'd be good at it by now, wouldn't
you'd think we would be. This is one of the first whereby public and private sector have stepped in so much to support and protect people through. So, I'll cover some stuff probably when we're looking forward, but the downsides of the pandemic on the financial wallet and the vulnerability and stuff like that is still yet to materialise.
Yeah. I mean, what do you think? Because actually, obviously, I mean, Starling, you guys, you've done so much in this period of time to keep people in business, and obviously, there has to be businesses to be able to recover in that process. So, I mean, what have you guys seen? You must have seen sort of crazy demand in the beginning and hopefully sort of trickling off as people really sort of stabilised, eh?
Yeah, I think you can see a lot. I mean, obviously, for the UK, it was great to have the British Business Bank in place currently, because a lot of the things that other parties said here, I mean, how quickly things had happened. I mean, things started happening in March, and by April we had already like 4 or 5 programs being launched, which would have never happened in the past. I mean, any program has to go through a whole, procurement exercise, analysis, but people reacted so quickly, and it was all of this, being able to have the data, the information, the live, that we could see what was happening quite quickly, and people were agile, and we are very grateful for all the fintech out there and all the banks that stepped up, but also all the alternative finance providers to actually be able to deliver these things, because we designed them, but it wasn't for us to deliver. We needed the whole ecosystem to deliver this alongside us, and it's just been incredible to see that. I would never have thought that this would have been possible without the technology, the infrastructure to bring all these parties together, and being able to do this from your kitchen and your lounge and your, all these things. If we didn't have the technology and the investment of the last decades, I mean, it all came together, I guess, under this kind of crisis situation, and being able to react quickly. And we know that there's a long way. I mean, from the recovery, we already started to launch all the new programs which are more focused on the recovery and what happens next, because it was all about giving the funds to the companies to keep them alive, because we need them to be there. We don't want them to die because of the pandemic, but good businesses should have access to the funding they need, and then there should be more funding to take them out of this now, because obviously we're slowly seeing the reopening and things to happen, but there's a lot of focus on technology, I guess, to make this, and we shouldn't lose it, because it makes you much more agile, a business, being able to be more flexible, having access to that. I mean, brings your customers in, brings everybody, even if it's digital or if it's in present, I guess, form. I mean, that's why it's quite important to keep that going in the UK.
Yeah, I mean, you touched on, Martin, a little bit about people doing things that they were trying to do before but couldn't, and you've said that as well. I mean, are we seeing? I mean, fintechs have been out there. You guys released lots of new products and things that were very pertinent to solving problems in the pandemic. But we have seen big organizations do this during this period as well. So do you think they've learned that, to your point, a little bit, that they could always do this thing, it was them getting in their own way, do you think?
Well, I mean, I don't know, just, in terms of thinking about how our customers reacted, I think part of it was really, first of all, we had to do it. And I think, to your point, as an industry, I think financial technology should feel, I think, pretty... not proud is perhaps too strong a word, but pleased that we've been able to act and react. And I do think we underestimate the telecom infrastructure and how that's changed. If this had happened 5 years earlier, I think we'd have been all over the floor, both as institutions, organisations, and certainly from a consumer standpoint, working from home with the bandwidth, sharing it with my sons who are gaming, downloading, streaming, whatever they're doing. I think we wouldn't have been able to do it without that infrastructure. But I do think organisations had to do it, and therefore found a way and realised there was a way. And I really hope we persist with that, because certainly in FIS we're a big organisation. We certainly learnt that very quickly as well. Needs must, and you just get on with it.
Yeah.
And yeah.
I mean, I've definitely seen that momentum. People are sort of almost going, look, if we were able to get the entirety of our organisation working remotely in like 5 weeks or whatever it was, shipping towers and all sorts of weird and wonderful stuff, then what else can we do with this momentum? Like, what else can we keep doing? There's lots of people sort of asking those questions. But I guess, I mean, I don't want to be too cynical, because it's like, it shouldn't have taken a pandemic to make those things happen. But now that it has, it's almost the floodgates are sort of opening up to a certain degree. I mean, do you feel some organisations are sort of connected more with customers than ever before? And maybe starting with you, Symmie, because we've been remote, but they're more customer-centric now than ever before.
I was going to say, I think the more interesting thing is what this has done for trust generally.
Yeah.
So, the last financial crisis was a genuine financial crisis, and the banks were the villains. Now they were the, mode by which we gave support. But also it was the digital banks that gave support. And I think not only did it get people to adopt digital, it got them to realise that, particularly in Starling's case, we're a real bank. We're really there if you need help, 24/7 support. And we had a lot of customers move to us that weren't able to get their bounce back loans or the support that they needed from what they thought were, real branch-based bank, because they weren't people there able to help them with their manual processes. So I think a huge part of this is getting not only the organisations ready to deal with the digital, but also getting customers demanding it and comfortable saying, actually, maybe I don't need this large institution, maybe I can actually get there quicker, better, faster with someone who's started doing that natively and thinks about it from the customer's perspective first.
I mean, my mum hasn't been into a branch for 18 months. Do you know what I mean? Like the addiction has been broken. You know, so actually now that you've sort of shown that those things are not necessary, then actually digital becomes the default, right?
We used to have people calling us and saying, look, can I please speak to a relationship manager? And that's not our business model. And they would initially be like, oh, I'm not sure. And now people just want to make sure they don't talk to us ever. They love the fact that they can do stuff at their fingertips and actually are kind of upset if they ever have to contact us. And I think, you know, if you had to explain that to people, they would probably be like, I'm not ready for it. But when you sort of had to force them into it, once they're trying it, they're like, this is great. Why did I ever have to go make an appointment with a branch manager?
Yeah. It's weird, isn't it? We talk about this a lot where it's like, it's financial services. It should be a service. Like, it's obvious, isn't it? But it's almost defaulted into products, hasn't it, very often? And now that service piece is really sort of coming back to it. I mean, have you found this in your travels in terms of that sort of change? Because that reinforcement of that relationship is almost critical to being a good business, right?
Yeah, I'm going to just challenge a little bit that it's only the digital banks that have got there. You know, some of the legacy banks have...
Well, it's been 10 minutes. Let's have a fight.
Have invested heavily in the startups. You know, people like Santander and that have big budgets to help startups get to market with lots of technical solutions. But without a doubt, there's confidence. I mean, you know, if we called out to the likes of Amazon and people like that, they created the confidence by which I'll buy from anywhere in the world. You know, immediately. I'm not questioning. Why am I not questioning about it? Because I can send it back free of charge. They'll come and collect it. The whole experience is one, I'm taking little risk. But at the same time, 1 in 3 of us have been targeted, unless I'm the only one who's being phoned by the HMRC, Inland Revenue and National Insurance lately, being arrested every day, then 1 in 3 of us have been targeted by scams, and that is the huge growing area. And then we're seeing an awful lot of fraud, both at SME and consumer level, that's going on. It's very interesting. I nearly lost all of my savings 7 months ago when I went to invest in a bond with one of the top 4 American banks. When I literally found out 2 minutes before we pressed send on the transaction, and it was just something the guy said. They'd taken me through their compliance team, everything, and I was about to deposit a large sum of money, which would have ruined me if I'd lost it. And when we went to the FCA to check why they were not registered as a scam, the FCA search for scam cloned companies does not have fuzzy logic. So if you're an old age pensioner and you mistype Chase Manhattan, it won't tell you it's a scam. And so there's still lots of areas that need to be picked up in the digital space, I think, for confidence, for security, for protection, that needs to happen. And a second part to it, which because we all seem to have forgotten a lot of things we were grappling with. We were grappling with IFRS 9. We were grappling with persistent indebtedness. We had breathing space coming into the UK just as we started, and lots of other things happening. We've still got a lot to come. The Walden Review is out. There'll be a lot of change coming from that. So I think we're in a really good place. The pandemic drove an awful lot of acceleration. The digital transformation has been massive and huge. But I do think that we just need to make sure that we're aware of some of the risk sides and sides that we still need to focus on hard.
Yeah. I think I really do take your point on digital banks, and I love Starling, but I'm quite fond of Santander too. They're quite good. But I think digital isn't just the distribution mechanism for services. It's how you fundamentally work. So I almost kind of think the challenge is that many organizations have got digital manifestations, but they don't have digital processes, which really is the point you were making earlier on. Is it sort of highlighted the fragility almost in many of those systems, because it was a bit of a house of cards almost, in terms of something topples and suddenly you realize somebody's filling in a process in Chennai to do a loan application, and it just didn't work, So all of that fragility in the system, when, as you say, it's so societal critical infrastructure, really needs to be resolved, I guess.
But I think as you look at the way embedded finance appears across the buying cycle or the selling cycle or the investing cycle, whatever it might be, people will rely on the fact, or will depend on the fact, that fintech creates consumable, repeatable service offerings. So fintech isn't just the technology piece, it's also the servicing piece behind the scenes. And being able to package that, regardless of whether it's a bank providing it, a large tech company providing it, or just a retailer or something providing it online, you want to know that behind it there's something solid, be it from a risk or regulation standpoint, or just simply knowing that the process won't fail from an execution perspective. So I definitely see that as the world goes forward, you'll see that combination of service provider emerging that actually provides that end-to-end component of, call it banking, whatever it is from a financial perspective.
Yeah. I mean, do you think, I mean, collectively, guys, do you think are we going to snap back? Are we going to just go back to normal? Like, are we all going to commute 5 days a week? Are we all going to, is my mum's going to start going to branches and using cash and all the, like, there's been like such brave predictions of like the death of physical money and everything that's sort of going on. But if we sort of keep in this trajectory of like digital only, or 99% digital or whatever, then actually are we going to be in a situation where we're leaving groups of people behind who have had pent up feelings about wanting to do those things or wanting to have that connectivity, or if you could have gone to an office to see how thick that carpet was in that investment place or whatever, then actually you would have known that it was a scam before it was. So there is fragility in that system. So do you think people are going to want to get back to like the normal ways, or do you think this is a trend that will continue post-pandemic?
I think going back, I mean, it's going to be, I don't think people will go completely back. I mean, I think it's been such a long time. And even when I see my mom using a phone and everything, I mean, and you're like, things that they never thought they would take on their hands. But I mean, people are used to, and actually they're finding it exciting because you have control of your life, your finances on your phone, your life is all on your, digital is all on your phone, everything. And how quickly you can get things done versus wasting your time on a queue, I guess, to do something. When you have more power about how you will react and what you do, I don't think I can see people going back. And also, this whole digital transformation is quite important, obviously not to exclude people, and obviously goes back to making sure there's access and democratizing access to all of these things. Back to your comments, I mean, obviously there has to be, if there was no broadband and internet in an area, then good luck. I mean, then you don't get any of that. So you have to make sure there is access, there is all of that out there. And, the UK, I mean, even from the venture side equity, I mean, all the investments, I mean, majority is all on technology and infrastructure and all of that as well. And fintech is on the top of the list for all of this, because we do know that it's an important part of life, financial inclusion and all of the things. I mean, you can't leave it behind. And I think people are ready. I mean, we are certainly not going back 5 days a week, and we don't expect people to. I mean, we are much more creative and much more inclusive, actually, especially for companies that have multiple offices, different parties. Actually, people have never felt as inclusive as they do now, because you can have a meeting with 50 people if you want, or 200. It doesn't matter, when before you said, no, it can only be 5 because that's the room size. Now, you don't have to think. There's no boundaries of what you can do, and technology has evolved so much, you don't need to. I mean, obviously it's important that contact, and people will still want it. So that goes back to your customer service. How do you engage, how you interact, and you're still there. You don't just disappear, I guess.
But I don't think we've solved the challenge of financial inclusion generally. No. I don't think the pandemic has helped at all in that respect. But I do think technology provides a path and a solution by embedding financial services within transactions. You suddenly enable people to participate in it, particularly if they don't. There was a great presentation earlier about that. You don't need a card anymore. Particularly if you don't have a card anymore and you've got some other device that you're using. I do think it opens up the ability for people to absorb or participate in banking services without it necessarily being a bank.
Yeah. You've raised a good point, Martin. So I think there's two sides to it. The financial equality has actually been, the gulf is bigger. The pandemic has brought that. It's at 34.5%. It's the 4th highest inequality rating we've had since 1977 in the UK. So there is this massive gulf. The banks were going to run out of capital, and impairments were going to swamp their balance sheets. Wrong. Banks are full of capital, don't know what to do with it. Yep. And their impairment hasn't hit yet. So they're not quite sure how big that's going to be. And then digital is without a doubt now on Maslow's hierarchy of needs. The Germans actually put the Wi-Fi on there about 5 years ago. You cannot cut off the Wi-Fi in Germany, all right? Like you can't cut off the electricity in the UK. So this inequality is there. There are difficulties with it and challenges with it. The FCA in February, their research showed that 52% of adults in the UK can be classed as financially vulnerable. Okay, 27.3 million people. So I think there's a reality that It's great for those that were able to save, have the technology. Typically when we're in these kind of forums, we're not representative of the UK demographic. Okay, we're a very small group compared, with those that don't make it to these conferences and work in the fields that we work. So from my perspective, I think it's been absolutely fantastic. It will be needed, but I do think there'll be need to work hard on how do you include somebody when you can't feel them, touch them, speak to them, and get all those securities that you're looking for, unless you have, and this is, shout out to FICO, unless you have the ability to wrangle and orchestrate the data you need from all the different sources to make the right decisions for the right customer, for the right outcome on whatever that transaction is that you're doing with them. That's the only way you're going to be safe, and there'll need to be a lot of safeguards. I just want to do a shout out. We talk about the provision to the customer in digital. I think the other ones that we need to shout out to, and there'll be many in this room, is the vendors who all then had to deliver technical solutions remotely. To their client base, the banking, the lending, the credit facilitators, and all the collections industry. We had 400 live delivery projects when nobody was allowed to get on a plane. Only 2 stopped, and 398 completed. All remotely. I don't think our global delivery centres will get on planes and trains again. All right, I think they'll be used to working from home. So it wasn't just what the providers could do for their consumer and SME customers, but it was also what the vendors could do for the providers, which I think was also impressive.
I think it's definitely sort of brought everybody through that ecosystem together, hasn't it? I think the customers have seen organizations going out of their way to try and serve them during obviously a testing period, keeping them going in one way or another. And actually all the way through that value chain, people have gone above and beyond, as it were, because everybody's been dealing with it on an individual level as well as from a business level. So it's been a fascinating one. I mean, you touched a little bit there on data. Maybe just unpick that a little bit more, because I guess when you talk about inclusion, you've got to see those customers to be able to then include them. And then once you've got data and you can actually start really understanding their needs and actually how to get to them. Because I guess the challenge always with inclusion is people kind of think having a current account is being included in financial services, but most people don't know what a percentage is, and most people don't know how APRs work. So it's like education is so critical in that process, isn't it? Because just being able to make payments or store value is a tiny percentage of the problem, isn't it?
The reason I'm smirking is that there's an app in China called Beihai. The gentleman down here kept referring to China. I worked with WeBank when they first launched their lending from WeChat, so it was interesting to hear you cite them. Beihai is a dating app, but interestingly, one of the most important pieces of data on the dating app, whether you swipe left or right, is their credit score in China. So they're definitely an education and a need to do that education. And I was interested to hear that I looked at 12 to 16 different sources of alternative data that wasn't bureau related. Okay, it wasn't the traditional financial services data. And it was interesting that at the end of it, and this actually came out in a conference last year as well, is that the challenge going forward will not be what data can I get hold of. There's loads of data we can get hold of, as I listed off earlier. The challenge will be, how do I wrangle that data to give me a single profile on a customer? Because I've got so many different sources of data that will show me so many different things. How am I going to actually bring it together? So I think we don't have it in the UK. FICO in the US has a thing called My FICO. FICO is the FICO credit score, Fair Isaac Corporation. And my FICO in the US, everybody knows their credit score in the US more than their social security number. Right? We don't have that endemic awareness, interest yet in UK and Europe about my credit worthiness. We're miffed when we're turned down, but we don't blame ourselves. We blame the lender for making the wrong decision.
But I think we're about to enter a period of where a lot of that can be solved with artificial intelligence, and we're in the anti-money laundering space, in the identity space. There's literally going to be an explosion of capability. And the data is out there, to your point. The challenge is assimilating it, bringing it together, and being able to sift from that, a real intelligent understanding of the customer or whoever it is, that's the individual or the organization. But we're already starting to see that. So we've got a partnership with C3AI where we're combining the combination of their ability to suck data out of sources plus their engine with the additional data, the traditional data that you bring from a FICO or someone like that, so that you can really build a composite which allows very quick decision making. Because part of the problem with combining all that data is if it takes you an hour to come up with the answer, well then it's almost useless. It could be valuable in the context of business-to-business transactions, but not in the context of the consumer. So I do think we're at a fantastic watershed moment in the industry that artificial intelligence is literally going to blow away so much of the traditional way that we've been building up our ability to understand the individual.
Yeah, it's interesting how we and to your point, how we surface that then is going to be fascinating, because almost organizations having all of that power and all of that understanding, but allowing customers to understand actually how they can influence those things is going to be critical, because like you say, with FICO score or with your credit score in the UK, you only know it when there's a problem, but actually being able to influence it going forward to right that problem is almost sort of stand on one foot and spin around.
We're ripe for regulation around identity. We are ripe for regulation around that and about how people will end up monetizing that and allowing others to consume it. We have to have it, I think, at some stage. It's not necessarily something this government would necessarily align with because of the nature of the politics involved in it. But I think it's crucial in my mind.
Yeah.
We will learn from other areas. We've got 2 projects going on, one in Tanzania and one in Kenya. And what's really interesting is that something that is a big problem in Europe, Simswap, big fraud issue. Yeah. Well, actually, the challenge there is they only have one phone in the village. They all use their own SIM. Yeah, but they've only got one handset. So they actually work on Simswap. That's exactly how the whole thing works. They don't have any branches, they're remote, and this is through the M-Pesa platform and the mobile providers out there. The banks are right in the background, simply making the accept or decline rule. They're not the channel to the customer. They don't converse with the customer. These people borrow $6 a day. They have 3-day payment terms. They have an NPL ratio of 0.04%. We would love that in Europe, where we're ranging anywhere between 14, 42 in Greece and Cyprus, and 4 to 5% depending on Nordics or the UK. So, there's some very dynamic stuff going on in the digital fintech world in markets that have different challenges, where if we looked at their operating model, we'd go, that's mega high risk. And they're going, no, it's the way it works.
That's a perfect example of how perhaps the solution to vulnerability is actually more technology, and maybe we just need to be more creative with how we think about it. And the normal wasn't that great. There were a lot of people that were excluded from that, and I work for a digital bank, so I'm a little bit biased, but I think we have better chances doubling down on that and saying, well, let's solve these problems using more information, more technology, and thinking about those people than ignoring them and saying, well, we better go back to what was normal to protect them.
Well, it feels like we've got the tools now to fundamentally actually address those problems, as you say. So it's everybody focusing on real customer problems rather than arguing about who owns what and how this works. Yeah. It's probably a lot better place to be. Yeah. I guess we're rapidly running out of time. What I'd love to do, it's been just nice talking to people, really. I'll be honest, it's been nice to just be out the house. There's lots of change that have happened over the last, I guess, 18 months in terms of everything that we've seen with the pandemic. But we've come a long way, but there's still a long way to go. I guess for each of you, never really like to just do a procession, but let's start at the end and sort of go, contestant number 1. Yes. What would you like to see happen over the next 5 years to really sort of embed the changes that we've seen over the last 18 months?
Yeah, I think I guess back to some of these discussions here, I think there's also a lot more focus now when we look back to inclusion, diversity, back to ESG as well. I guess a lot of that is come a lot more into the core of things as well. So kind of not forgetting, doing good as well, I guess. And I think the pandemic has brought a lot more back again of okay, who is most affected? How can we do better? How can we avoid any much more happening in the future? And I guess I would be seeing a lot more ESG, and with all this data and analysis and information, you can actually see a lot more of the impact we are doing on the investments we do, and how the whole society is getting better, I guess, in some ways benefiting from what's parties are investing and not just plainly out there. And I think also, obviously, we see a lot more investments in technology. I mean that's the way forward. I mean, you can't forget that R&D and all of that, because who knows what's next. I think it's opened the way now to find new ways to do things and quickly. I mean, which I hope it stays, because it's been revitalizing and cutting the red tape, I guess, in many places.
Fingers crossed. People are definitely voting with their money, aren't they, in terms of the investment? But what do you think? What would you like to see continue, or what else would you like to see happen?
Yeah, I think I didn't mention it before, but one of the things that seem to, the barriers that have sort of lowered are around collaboration, and that's big fintech, if we want to call FIS that, and emerging fintech, and being able to marry the best of both together. One, being able to provide the security, the process, the I guess some degree of comfort from a banking standpoint that you can deliver end to end, but then some of the really innovative things that we've been hearing today, I just think are fantastic. If you can marry those two together in a more comprehensive way, then I think as an industry, we'll be able to deliver some of the inclusion and other elements, as well as giving and accelerating the change that we're seeing in the market as a whole. So that collaboration and going back to the inclusion topic, I think are top priorities.
Great. What do you think?
It's hard to argue with those.
It's hard when somebody took all the good answers as well, isn't it? I should have started this there. I apologize.
It's okay, stuck in the middle. I would say it's using more of the benefits that technology bring with the service aspect of financial services to really solve some of the problems we see in society. So that's climate change, that's inclusion and equality. And we're starting to see a lot of that now. I know Starling's very proud of the things we're doing, and obviously it's a big focus of why we're doing things. And I think being purpose-driven is going to be a much more important part of fintech as a whole.
Yeah, I completely agree. There's a lot more people almost reconnecting with their purpose as organizations, isn't there? Which is great, and that says a lot about the customer narrative. But you sort of see people really doing it, don't you? Which is important.
We have a lot of tools, but the tools are, they're not that exciting unless you're actually solving a problem, driving change. And I think that's really, we're going to see a lot of acceleration of that. And I think that's what's really exciting.
Okay, Bruce, what do you think?
A couple of things. I think continuing the support for the startups. There's been 35,000 startups in the last 5 years. We know many fail, but the insolvency system in the UK is one of the most mature and sophisticated in the whole world, and allows people to keep trying again. Yeah, and that's a great thing. I think many of the comments have been made, but the other thing that I really think, because my background is all collections and recovery, other than an army career, and for me, the big shift that I've thoroughly enjoyed watching over the last 5 years, and I hope continues, is we've dropped the baggage of banks being an umbrella when it rains, or not being an umbrella when it rains, only when it's sunny. We don't, in a capitalist consumer credit environment anymore, consider debt to be the Beelzebub of life, and the damning of debtors. And actually, we are leading the way, closely followed by countries like Australia and South Africa, in driving right outcomes and recognising that debt is just a reality of existence in the UK, and that these people need support. And I think the banks have shifted massively, driven a lot by regulation, but we lead the way in that. And I hope that that really continues, where we've stopped all of the third-party sector, debt purchasers, debt collectors, they don't call it that anymore. It's debt resolution, it's customer care, and all of those big entities have moved well in that way. So have the back end of the banks that were looking at it, the traditional banks. The fintechs are building up portfolios that are getting there now. And for me, it's just great that debtors aren't the Beelzebub of society. I attended a Citizens Advice Bureau conference 20 years ago as a creditor, and I got battered verbally by about 170-plus-year-old ladies, all from the Citizens Advice Bureau, who thought the banks were the worst thing ever to exist in the UK. And for me, it's a pleasure that I will go out of my career, probably in the next 2 to 3 years, into retirement, seeing the treatment of people in debt far better than it ever was in the past, and I hope that continues.
Agree. I think it's if I sort of, from my perspective, it feels like we're moving into a period where people are. I think we've just talked about it enough. I don't mean on this panel. That was really rude. I mean,
Why did you invite us?
I know. It seemed a bit rude, didn't it? I mean, generally, I think people have just talked about stuff for such a long period of time. I feel like we've moved into a period where people are actually doing it, which is really exciting. And whether it's fintechs, whether it's big banks, whether it's providers, all the way through the mix, people are actually getting out there and making it happen now, which is fantastic. And ultimately, that ends up being great for customers, right? And you don't get beat up by old ladies in conferences anymore, which is good. So on that note, we're probably going to have to wrap up. Thank you very much for everybody on the panel. Really appreciate you coming. For everybody who tuned in, really appreciate it. For everybody who turned up, thank you. That was good fun as well. But this has been a lot of fun. I'll hand back over.